Good afternoon, good morning, good evening, everyone, and welcome to this video on point and figure charting. This is the most badass form of charting that I know. For me, this is what I use to trade. I use candlesticks and stuff for my analysis, but point figure to trade, all right? Point figure is the price action trader's purest chart form, okay? And what I mean by that is, well, we'll get into that. Most of the information here is from Jeremy Duplessis' book, The Definitive Guide to Point Figure Charting. His is the most contemporary work on this chart style, but some other resources that are, I think, very helpful with this are one of the first books and authors, DeVilliers and Taylor's Point Figure book, and also Kirkpatrick and Dahlquist's Technical Analysis, the third edition, has some really great additional anecdotal material that is very useful along with Duplessis' work. So, anyways, point figure charting, X's and O's, that's what we're looking at. One thing that separates this style from candlesticks is that there is no time factor. All right, we do not use a time factor here, and we also do not use volume. Point figure, excuse me, is and always will be an intraday charting method. It is the price action trader's purest chart form, and it requires intraday data. And some of the other things that are interesting with it is that they're named after their box size and reversal amount. All right, we'll get into that. The X's and O's are called boxes, and X's represent upwards movement, and O's represent downwards movement. We'll get into the box size here in a second, but a note about dimension. So candlesticks, Japanese candlesticks, they're actually a pretty advanced form of analysis. They became like the de facto chart style. In the mid-2000s, replacing American bar charts. But Japanese candlesticks are three-dimensional in nature, and people incorrectly use them on fast time frames. Japanese candlesticks were really meant to be used on weekly and daily time frames. But Japanese candlesticks are three-dimensional in nature. And what I mean by that is there's three variables that one needs to consider in order to properly interpret a Japanese candlestick. That is time, volume, and price. Two of those dimensions do not exist on a point figure chart, and that is volume and time. That does not mean that these are one-dimensional, because we do see reversals plotted. So every time there's a new column that changes, that is plotting a reversal. X's and O's, okay? Again, X's represent upwards movement, O's represent downward movement. A good way to think of it is X's are like green candlesticks where the close is above the open, and the O's are red candlesticks with the close below the open, all right? On TradingView, we established the box size up on top where the data is for the chart. In this case, this is the Australian dollar to US dollar pair, so 0.002 equals 20 pips. If this was a yen pair, it would be 0.2 pips, or 0.2, which is 20 pips. So 20 pips is the box size, all right? So, and then we have reversal amount. We'll get to that in a second, but if the box size is 20 pips, each X and O is worth 20 pips. Pretty easy, okay? And then we get into the second part here. And this is the reversal amount. This is probably the one that's a little confusing to understand right away, but you'll get it. All right. The reversal amount is simply the number of boxes required for a new column of X's or O's to form. All right. So if we're looking at that's set up there. Okay. If we're looking at like this column of X's, now that column did not form. Okay. Oops. Okay, here we are. Sorry, I got a little. There goes the smoothness of my recording. But basically, what we're looking at here is that this is a three-box reversal chart. So when a column does show up, the first three X's or O's will show up. But they only show up after price has moved up three boxes from the last O. So here's the last O. And we go 1, 2, 3 boxes after price moves up that far, we see the reversal column show up, okay? On the inverse side of that, we see you know, on the bottom side, we see, you know, back here, price traded down, up, and then down, up, and down. You can see here, 1, 2, 3 boxes worth of movement. Below the last X is where we got that third column of O's to form. Now, that does not mean that only 3 boxes form, okay? Once 3 boxes form, all right, then that's the only time you'll see 3 of them print at the same time. If it moves down another 20 pips, a new O will form. Another 20 pips, a new O will form. You don't have to wait 3 boxes worth of movement for these to show up. It's just on that first reversal, all right? But here's one of the nice things that I think, and this is actually not just for new traders, but for people who want to be better traders. You know, the trick with trading is that it's an emotional game, okay? And you know, I'm just speaking for myself. Candlesticks are hard for me to use because I have such an emotional response to them. Every time the wicks are shooting up all over the place, or you know, all that activity going on within the candle, I don't like it. It makes me lose my focus. And there's a lot of stuff going on in a candlestick in relation to the others. It's just a lot of stuff. We don't have to worry about that with point figure, okay? Point figure signals are very clear and they're unambiguous, all right? So in a nutshell, all we do, this is breakout trading, folks. This is all this is. So here's the double bottom, okay? We see price was trading down, then up, and then down again. Where's our short? Right there. It looks easy because it is that easy. Honestly, it is that easy. I really hate showing charts of past behavior because that doesn't mean that you're going to get the positive results, but this is honestly how this works. So that's the entry, all right? Very simple. There we go. Our entry would be right down there. So over here we had a double bottom formed at 69 even. The short entry would have been at 68.80. Again, this is a 20 pip chart. On the long side of it, here we have a double top that formed at 71.40. And there's a double top. Where's our entry? 71.40. One box above that, which is 20 pips, is at 71.60. Okay? Very, very easy. Here's an example of a triple top. Again, same thing. There's your entry or a triple bottom. Same thing. We short below the triple bottom. Okay? So those are multiple tops and bottoms. That's how you trade them. Very simple, right? It is. It is. And I want you to get away from thinking that it's not this easy, especially if you come from candlesticks. Because folks who come from candlesticks, and I know this from experience, is that breakout trading on candlesticks is often an activity met with a whole lot of fake outs and washes and a lot of whipsaws. Okay, point and figure avoids like 90% of that kind of activity. The other nice thing about it is patterns and trend lines are really easy to see. Okay, I only use 45-degree trend lines. Which, how you draw these is very simple, okay? You don't have to look for a wick or a body to draw off of. So right here with my cursor, if you can see it, here's that X. If I was going to draw the trend line, I would just go from this X to that O. Or from down here, if I wanted to do an uptrend line, I would go from this O to this X. So you're just looking at the two columns next to each other, and that's how they are drawn. That's it. You can draw subjective trend lines. I personally don't use them, so I don't encourage others to either. I encourage you to learn about it, though. I mean, don't take my word for it. You know, continuation patterns that we see in markets, in trading, like flags and pennants, you know, ascending triangles, descending triangles, wedges, all of those things are present in point figure as well. In fact, I think they're a little bit easier to see, and the structure is easier to manage. This is a bear flag that I probably should have colored red, but what do you do? And you can see some triangles here, but we do the same thing. Remember what the overall rule is what? We only take multiple bottoms or multiple tops. When those are broken, that's our trade. So ignore that little page there, but here's some patterns. So just because price breaks out, okay, just because we moved above this triangle here on this X, and just because we moved below this bear flag here, that doesn't mean we go long yet or short. Okay, where do we do that? We have to wait for a what? A multiple top or bottom. Here's a double bottom, there's the short entry. Here's the double top, there's the long entry. Okay, very simple. And here's the other part that I think new traders benefit from this so much, because there's so many things that new traders struggle with identifying, and I think one of them, and it's actually one of the topics that most new traders just avoid, is how to identify profit targets. Okay, so point figure makes that very, very easy. Very, very easy. Okay, so let's do me a favor. I want you to kind of ignore everything beyond this red column of O's. Okay, pretend like nothing exists over here. Okay, just it doesn't exist. Try to humor me. Okay, I'm going to show you how easy it is to identify profit targets. So let's say, you know, here I see prices are moving up, and I want to know, okay, if there's going to be a reversal column of X's to go long, I already know where my entry is going to be right away, because I know where the double top is going to be, and then I know where my entry is. But where would my profit target be? Well, the formula is simply this. It's how many X's are in this column multiplied by our box size multiplied by our reversal amount. Okay, so I know that there are 7 X's in this column. I'm going to take that and multiply that by 20, which is our box size. That's 140 pips. I'm going to multiply that by 3, the reversal amount. That's 420 pips. Okay? And then I'm going to add that to the low of this column of O's. So the low of this column is at 7140. So I'm just going to add 420 to 7140. And that brings me to 7560. Now I will say that when I was doing this, I did not intend to find an example where the top of a column of X's was actually the exact profit target, because this rarely happens. Okay, you rarely have this occur. This is really not a good representation of what actually happens. Most of the time what happens is your profit target will get hit, and then it'll keep going, or it'll be under a little bit. But and the other thing is that is not that should be like your max profit. So you should really split up your trades in this. So if you take a full lot, you know, maybe break it up into quarters, and you know, take some every 40 or 60 pips, and then let your last quarter of that position, let that run and see how far it goes. But that is how you can identify at least the range that you could be moving in if and when you do get an entry from this level here. Okay, very, very easy. So the potential profit from the entry is an estimated 320 pips. Okay, that's hypothetical, very hypothetical, but very doable. All right, and yeah, so I hope you found this video helpful, and I look forward to speaking with some of the more advanced and additional things inside point and figure. But for now, I wish you the best, and have a great day, and good luck trading.